Welcome to Power Hour, where the editors of Powersports Business interview the movers and shakers of the powersports industry. Hi, everybody. It's Brendan Baker from Powersports Business with another Power Hour, and we got some heavy hitters here. we're like, we're very privileged to have the Honorable Juan Pardo and George Chaconas, as well as Jesse Stopnitzky. Is that close enough? Pretty close. Stopnitzky. Yeah.
Nailed it.
And from Performance Brokerage Services, and we're gonna talk a lot about the buy sell market, what's going on in power sports today with dealerships, especially as the M&A activity is concerned. We've seen a lot of some high profile acquisitions lately, and George and Juan and Jesse have been part of a lot of deals over the years. A lot of deals. I can't even count, there's so anyway, let's start with Jesse right now, because Jesse hasn't been on our show, our program before, and they're out in California, so we'll let Jesse tell me. Your family founded Performance
Yes.
Brokerage, so tell me about yourself, your background.
Yeah, Brendan, thank you. And thanks for having us. So, Jesse Stopnitzky here. I'm a co-owner in Performance Brokerage Services. We are a family-owned company, as you said, founded by my father, actually, back in the early 90s, selling all kinds of all kinds of businesses. And we came across an automotive dealership, and that's what really set off our practice of specializing in dealership sales. And over the years, we had dealer friends that said, well, I also own a Harley store or a boat store, power sports. Can you sell that too? And 30 years ago, it was foreign to us. Now, with the division that George has built and Juan as well, of course, it's become second nature. So we've diversified over the years from automotive into power sports, RV, marine, trucking, and equipment. And what we found is the dealer body has followed a similar trend. Oftentimes, we see dealers that are looking for ways to de-risk their portfolios, their dealership portfolios, by diversifying and developing these new verticals into different spaces. So we've seen a lot of automotive dealers over the years coming into power sports and power sports into marine and et cetera. And we've been really an influential or integral part of that shift and evolution in the dealership space. So our company, just quickly, we're 13 offices across the US and two in Canada. We are, in fact, the highest volume dealership brokerage firm in North America that specializes in these dealership sales, consummated well over 1,000 transactions in our over 35 years in business. But what I'm most proud of this organization is the foundation that we built of just doing it with honesty and integrity and the right values and having the right code of ethics and conduct. And that's allowed us to find success. And undoubtedly, that's the reason for our success. So very proud of the team that we have here, the rock solid core people, and George and Juan, and proud of the company that we built. So Brandon, thanks again for having us on and for allowing me the introduction. It's a pleasure to be here.
Yeah, no, thank you for coming on. We're very happy to have you, and I think you guys in particular have the pulse of a lot of market, because you talk to dealers in distress, dealers who aren't in distress, looking to expand. You see so many sides of things, and you're very much focused on the dealer, whether it's automotive, like you said, automotive, RV. But we all know George and Jesse, or George and Juan. We know you too, Jesse, but not as well as George
Of
and
course.
Juan. But they, have been around this segment and really have gotten to know a lot of the people in the industry very well. I mean, there's not anybody I call George. He's like, oh yeah, I know that, and he knows everybody what's going on. So, with that, I want to go and George, you've been with Performance Brokerage for
Over 20
over
years,
20 years.
21st year, started in
21st.
2004. So it's
Yeah.
incredible.
And Juan, you've been around for a few years too, right?
Yeah, just over 10 years. Was doing general M&A work before and come from the Fortune 500 world out of college. So,
Yeah.
yep.
So I think what's cool is, so Jesse mentioned that you were buying and selling businesses, right? Just general businesses, but you somehow homed in on dealerships, and then Harley, power sports as well. How did that, I mean, was it just sort of did you just drop everything else, say this is our thing now? Or was it like,
Let me share
right,
that story.
Yeah, yeah,
So
sure.
it's a great story because I started with Performance Brokerage Services. We had a different name at that point, and rebuilt our business after the Great Recession. But I was in the office, our corporate office in Irvine, and there was a marketing book of Destination Harley Davidson, like yesterday. And his father, the co-founder and owner, had facilitated that transaction. And I said, why aren't we selling more Harley Davidson dealerships? And his brother, Jason, who I started with underneath their father, Moshe, said, there's only 650 Harley Davidson dealers in the country.
right,
How are you going to make a living and be able to sustain this buy sell activity? I said, well, I think we should pursue it. So I went to my first Harley Davidson biannual conference in Orlando and met some really great people that helped me understand the business. And then I reached out to Bruce Rossmeyer, who
yeah,
everybody knows in the industry. And Bruce really kind of became my mentor. I don't know
Wow.
if you knew
I
that.
didn't know that.
And Jeff Cheek too.
Jeff.
They're both no longer with us.
yeah, right.
Sad. I mean, these guys were so open and willing to help me understand the valuations and how they make money and the profit centers. It was like, and so since then, we continued to help buyers and sellers of Harley Davidson, and then we kind of migrated into power sports once they became more attractive as an investment, especially with right now consolidating all these mom and
Oh,
pops
yeah.
in one roof to call it a multi-line
Yeah.
power sports dealership. So now they're much more profitable and attractive investment.
Well, and Brendan, we didn't want to be a firm that just sold everything. We moved away from that in the early 90s to
Right.
specialization in automotive. And again, we'd sold some Harley stores and other stores over the years, but it was really George saying, I want to specialize in that. And that is something that's different about us. I've never sold a Harley store before. But
Yeah.
George, that's what they do. The Harley Power Sports one as well, of course. So that was really important to us that our clients were getting the industry expertise, the market knowledge that they deserve in their respective space. Just because we do automotive doesn't make myself qualified to facilitate a power sports transaction. And we needed to have people that were from the space that understood the industry, that would be in the trenches studying that business, studying that space. And that's when we had the fortune of George, who had a brilliant idea 21 years later, still specializing in the Harley Davidson and power sports space.
Well, he sold some places two or three times, I know, of different,
Yeah.
so
My argument there is either I'm good or I'm just aging with the rest of us. My hair is getting a little.
You've been in a
you
long
still
time.
got a good head of hair, buddy. You guys all have good head of hair, so you're lucky. But so let's move on to how would you describe the buy sell market right now through the first quarter of 26? Like what would be some of your words, adjectives to use for what's going on right now? We've seen a few bigger deals. I think the market overall turned out the upside. There were some upsides towards the end of the quarter that kind of raised everything up a little bit. So it's not as you know grim as maybe we thought it would be going at the end of last year, coming into this year. So what's your take on it?
One, I'll
Juan,
defer to
yeah,
you,
Juan, you take this one.
and then I'll help.
Sure.
Yeah,
Maybe
I
color
mean,
on.
I'll pitch it to
It's kind
Juan
of
then.
Brendan. It kind of bleeds over from last year with the political environment. Interest rates had gone up. A lot of buyers were on the sidelines, and now that we're out of COVID and things have normalized, a lot of these dealers they're having to deal with their own dealerships and their own problems and right sizing their own kind of fleet. And so now I think in the last month, I've actually noticed we've got a lot more calls from buyers, inquiring about opportunities. So I feel like some of those buyers that have been on the sidelines for the last 12 months are starting to come out and just see what's out there. And there are a lot more sellers than buyers, but I think the buyers are definitely scrutinizing deals a lot more to find the good ones that have a lot
Yeah.
more upside. So I do see there's a positive here in the last month, especially. I've gotten more calls from buyers looking for deals.
And you also have different kinds of buyers. You probably have some of those guys that are like bargain basement buyers
Yeah.
versus like premium level buyers. They want to buy an A1 property versus buying a fixer-upper type. Um, so overall, like, what are you seeing kind of as the sentiment with among buyers and sellers right now? Just more positive or just kind of, feeling things out a little more?
Let me
Yeah.
touch on that. So, with the announcement of Sonic Automotive buying 5 Harley-Davidson dealerships just in the last 45 days, it's put a lot of, positive um, and very attractive
Kind of a turning
uh,
point in a lot of ways, like
turning point on the attractiveness of owning Harley-Davidson dealerships. I think what helped to that is our new CEO, who has really gone out of his way to build partnerships with the dealers and finding out, communicating with the dealers, what do you need from us? So the market has gotten much more, I guess, stable and since the old regime. So we're very excited about and bullish and optimistic about not only Harley Davidson valuations and buy sells, but also just general power sports with these larger multi-line dealerships that built nice businesses and things have margin, have normalized. So we actually right now we're in the process of selling, right now a dealership.
okay.
Um, we're closing on one this coming Tuesday, tomorrow actually, called Bull Run Harley Davidson. We're selling it to um, Paul Veraca
So
and
you,
his
you
team.
broke the news here first, Brendan.
So
Right.
we're
Well, this won't hit till after that, but we'll get
well,
at least we'll get credit for it. We're
Yeah.
today, June 1st.
and so the
Monday,
sentiment is
June 1st,
very,
tomorrow
that's
it comes out.
generally, the sentiment is cautiousness, though positiveness. I
Yeah.
talked to a dealer this morning who is very optimistic on our U.S. economy. Um, I was, with everything that's going on over in the Middle East, et cetera, and Russia.
And
So
right now had some pretty good a pretty good first quarter as well, and I think
that's
they
true.
kind of righted the ship a little bit too because they were having struggles all last year, and it took them a little bit of time, and they restructured some things, and now it seems like those things are working as well.
If
Um,
I if I may add, Brendan, what we're seeing from a holistic view across the dealership space, anytime you're looking at acquisitions or growth and expansion, it's really a function of risk versus reward, right? And with that risk or reward being return on investment, right? And with the risk, you gotta evaluate the confidence level. So when we were in the pandemic and things were doing that bell curve, right? But it came down and we weren't quite sure where it was going to settle. There's been some challenges across all dealership industries. Things are starting to level out, settle out. We don't quite know what the new normal is, but we know it's not as volatile as it had been the
right.
last 5, 6 years. And that's going to instill a greater level of confidence. So the big dealers, the big groups, they've worked through their aged inventory. They've worked through their personnel challenges. They've worked through some of the issues that had them focusing less on growth as an external source, but more internally, focusing on internal optimization, resolving efficiencies, resolving challenges and issues that they were experiencing. And now that they've repositioned themselves to go out and acquire stores, but cautiously optimistic, as George said, they're more disciplined as an investor. Some buyers, in fact, overpaid for their businesses during the pandemic. And as
Okay.
things came back down, it's almost like having negative equity or in an ownership in a vehicle
Right.
purchase, right? So, and unable to get out what they put in. So people are being more conservative, but the big groups, the ones that for the most part tend to make up the pace of consolidation that really are fueling the market and fueling the buy sell activity, they're back on the hunt. They're just looking for quality opportunities that fit long-term growth objectives with brands and markets and culture that fit their strategies. And they're going to be a little bit more selective and disciplined as an investor this time because the scars over the last few years run a little bit deep. But we're absolutely seeing an uptick. When we look at buy sell activity, we look at two indicators. We look at values and we look at levels of activity. When we're studying the market, values are picking up again, activity's picking up again, cautiously optimistic, disciplined investors, but signs are pointing in the right direction so far.
Well said.
Awesome. And I think, like we said earlier, some of those big acquisitions like Sonic and, Crown, there's been a few other ones, Crown Automotive, a couple, and a lot more automotive are seeing the value of power sports. And, there's a double-edged sword to that because a lot of hardcore power sports people kind of view automotive dealerships as sort of like a taboo, like, they don't know but, I think there's certain things that those automotive groups can bring to the power sports table and kind of modernize us from what I'm hearing.
And it's going to be very difficult for a large group to provide the quality of service that a mom and pop will. It's just the sheer nature of having so many rooftops and employees and customers. It's very difficult for them to replicate and duplicate the hands-on customer service approach. But with big organizations comes big technologies and advancements and modernization that is good for all industries as a whole. Consolidation naturally poses some threats, but again, those big organizations can't quite service the customer the way a mom and pop or an independent dealer can.
So, what are some of the characteristics or what are you seeing in some of these buyers entering the Harley space, for instance? Like, are they, and I know we're talking more automotive side, but are you seeing more first-time buyers? And I know there have been a few deals, and George has had one, like, you had Stephen Towers is building some stores up, and you've had a few others, but are you seeing more like first-time guys, or is it more experienced hands looking at these kind of stores, you think?
Juan, you want to take this one?
Yeah, well, I mean, my understanding is Harley won't even approve you if you're not an experienced dealer or have run a store. And that was one of the issues we had dealt with Stephen, and we worked very hard with dealer development and figure out a solution, and we got him in there. And now we're working on his 7th store right now. So he's been a successful success story for Harley that we always bring up with them. But yeah, in general, it's going to be other dealers. We've even had general managers reach out to us looking for stores to buy, but then becomes the issue of, financial capital. Do they have enough capital to be approved? And so then you have to figure out, do they partner with somebody? And it gets a little bit more complicated. So in general, and I would, ask George too, I mean, it's typically other dealers or other larger groups that already own dealerships.
Yeah. And Paulina Mattel, who you guys know from Morgan Stanley, the Stanley Hack Group, and she did a column for us. They were just talking about like seller financing, kind of this very question of like some of these deals are now where maybe a general manager or somebody else wants to take over that it doesn't have the assets in the background. They may not get approved from the OEM, so they may need a little bit of hand holding till they get up on their feet, and that's where she's saying some of the seller financing deals come in. So it's maybe a little more creatively on the backside of things happening.
Well, you have to be creative, but Harley Davidson and Polaris, the two big OEMs, require you to have a certain amount of, net equity, net worth before they'll even consider it. So all those things have to go into play. I mean, you have to have a certain amount of net worth and liquidity. So to even get approved, like Juan said, the retail experience, whether it's automotive, power sports, probably marine or RV, so it makes it very challenging to identify a qualified buyer, and that's part of the value that we bring to our clients is qualifying the buyers, because there's a lot of people that will tell Mr. Dealer, if you ever think about selling, call me. Well, that was true 10
And
years
they put it
ago.
on a line on an online marketplace and
Right.
field leads from a
Yeah.
local business
Can you
owners.
buy
But
it from Facebook Marketplace? No, probably not.
but the barriers of entry in these dealership
That's good.
spaces are very high, and it's only gotten higher with how capital intensive these dealerships are and have become, how expensive the real estate has become, how expensive the units have become, and therefore the floor plan necessity, right? So the barriers of entry have always been high. And our business, we've specialized our business for the most part around dealer to dealer transactions. And that's where the cross diversification of being able to bring in other dealer groups from other industries. We've seen some private equity in this space over the years, of course. And of course, we've done countless first time buyers and transactions and GMs. But you have to get creative, as Brendan said, in finding a path to it. Nonetheless, the barriers of entry remain quite high in these spaces.
And hey,
Yeah, and
Brenda, I know we were generalizing Harley, but on the multi-line, we've run into that quite a bit in the last 24 months, especially with Polaris, BRP, where even if you were a dealer already, these issues where your current dealerships were not meeting national averages and these KPIs, they were not approving either current dealers to buy other stores because their current stores were not performing at the
oh,
level they felt was necessary. So we've had a handful of deals fall apart because of situations like that. So it's not always necessarily the experience, but it's also how you're performing at your dealerships.
That's a good
and I've
point.
definitely heard Polaris is a trickier one, Harley. But again, I think the perception is, oh, the metric stores, those are lower barrier than the Harley stuff. But I think Polaris,
Not anymore.
BRP, they're pretty sticklers too. So yeah, let's talk about some of the metric stores and the Japanese brand. So we're and when I say metric, yeah, I guess it is. You got Polaris and BRP, more North American, but also kind of the Japanese brands. Are the any of those generating stronger buyer demand these days?
One,
George. Um,
Go to Juan, yeah.
sure. Yeah, I mean, I think in general, it's what combination of brands do these stores have? What I found is that single point metric stores are not as desirable as stores that have multi lines like Polaris, BRP, Yamaha, Honda. It has more value to have diversification under one roof, where a standalone Triumph store, a standalone Indian store, has become very difficult, if not to sell one of those stores. So in that respect, I mean, we have buyers reaching out, and I think it's more specific on markets. They'll reach out and say, "Hey, we're looking to expand. Can you find us something in a specific market?" Um,
Oh, right.
I think that's kind of been the activity on our end from buyers.
I know in
The
talking to a few of our dealers, that have been out west, they want to stay out. They're like, we want to stay in the west. We're not going to expand east. Now, Sonic is kind of a different one because they have the power and footprint to be able to go like, oh, well, California, Florida, but a lot of people are looking like, I just want like Mountain West, or I want something, just in the Northwest or whatever.
Yeah, and that's true and part of our job too is to try to educate buyers on opportunities. And I mentioned the Elway Group; they're mainly based in the Colorado area. We had Star City in Lincoln, Nebraska, which we sold for Robert K. And we really pushed hard Michael Maladon to buy that store because we felt it was a great opportunity for them to expand. And it's actually, my understanding, it's one of their best performing stores now. So he's very happy because that has been one of their success stories. And that was way out of their, geographic, what you would pin them to be in the Colorado or Rocky Mountains. So that's one example.
Yeah, yeah.
and that
No,
that
that
was a very exciting opportunity to work with Robert, who become a personal friend of mine, a great guy. He's so happy that we helped him exit so he can do what he wants to do with his family and children. And, he's a big adventurer. He's doing, I think, some 20 groups right now throughout the country. But
do these guys ever really get out, or do they just get out of owning, but they still want to hang out and go to their 20 groups and I mean, what is motivating the sellers today? Is it the retirement? Is it just like, oh, we just lost
Yeah,
George?
we lost George
Okay.
and Jesse.
Well, we'll continue on until they pop back on if they get that.
Yeah.
Their signal was a little weak, so this part might get cut out. We'll hold this for a second till they
Okay.
here they come.
Here they come.
We'll
There they
have
go.
we'll clean this
Back.
part up. We'll clean this part up where it got dropped out. I've had them before. I did one with Young Powersports and it cut out, and then I didn't realize. I thought everything would catch up, in the cloud somehow. And we go to do it, and it's like, oh, there's nothing there. It's like you could hear him talking, but there was no photo there, no.
Yeah, we're back, right?
Yeah,
I wanted to also, we don't really talk enough about import motorcycle dealerships like BMW,
Some of the Japanese, yeah.
Triumph, Ducati,
yeah,
others. So
right.
we did successfully sell a multi-line European franchise dealership to Sonic in Charlotte, and it was just geographic, and they really liked those brands, and they're
Yeah,
obviously a BMW automotive dealer, and they thought it'd be a good fit. So you got to find that was a long, challenging transaction to facilitate that, and we were very excited to help.
how long do these transactions, take? I mean, generally, what's kind of the timeline from beginning to end? I mean, is somebody like if you're gonna give advice to a dealer right now who's considering a sale in the next 12 to 24 months, like how long generally is the process?
Typically, it's 6 to 7 months from the time of engagement to marketing, to go negotiating through a letter of intent, the asset purchase agreement, real estate purchase agreement, getting manufacturer approval, getting the DMV license. It's about a 6 months, 7 months. We've done them, though. We just did one in 45 days if there's a need, and the factories or the banks are ready to, pull the plug on them. We can move quickly as long as the OEMs participate. So
Yeah.
it's just, but
I
the
would
more
imagine some of those multi-line dealers too, the challenge of getting, okay, so you got Honda, you got, Yamaha and Cow, you got to get everybody approved through each one of those, right?
Yeah, and unfortunately, there's no standard application process for the
They don't
buyer.
make it easy.
So they have to do individual applications, and some take longer than others. Yeah,
Well, that's why you guys are the pros, I mean, because you guys know how to walk through some of those hurdles, which I think is very, underestimated probably.
And there's a lot of hurdles in these transactions, of course, and not just from the OEMs, but in working through the business, through the assets, through the documents, through the due diligence. So, although George said we can get it done in 45 days if we need to, that's not a situation we ever like to be in or want our clients to be in. We don't want life to make the decision for the client. We want
Right.
to prepare the business for a future sale in advance, iron out, or rather identify and then iron out the areas that could be friction, that could leave money on the table, that could cause delays or deal break the transaction altogether. We want to prepare the business well in advance to ensure a smooth and rewarding and fulfilling outcome, not being stuck with 45 days before the bank pulls the plug or the
Right.
agreement's pulled. And those aren't the situations we want to find our clients in. So 6 to 7 months to consummate a transaction on average. Some are shorter, some take longer. But ideally, you want to prepare the business six
Way
months,
ahead of time.
year, 3 years in
Yeah.
advance to increase the marketability,
Yes.
increase the likelihood of a successful outcome, increase the value, and decrease the friction and the challenges as you go through the process.
Yeah. And I know through, some of our stuff talking in Orlando at our conference and just like some of the dealers, like if they've been running it a certain way and it may not have been the best, it may work for them, but it doesn't work well for the books and it doesn't add value to the business necessarily
Yeah.
on paper. So you got to iron out those kind of things. Um, what would you what do you expect this buy sell market to look like through the remainder of the year? I mean, what is your feel for it at this point? We can go with Juan since he's been
Well,
pretty steady. He's my steady go-to guy, you know.
piggyback on what I was saying, this last month is getting more calls from buyers looking at opportunities. I expect the buy sell market to be very positive in the back half and going into 2027. And I think that falls in line with the performance of stores that I hear are performing much better in 2026 compared to 2025. And the industry as a whole, I think, is looking to have a better 27 than even 26. So I think all those things lining up are going to set up for a very active M&A market in the back half and leading into 27.
One other, real quick, one other thing that a dealer told me today, a big dealer said, George, finally, I think the buyers of these franchise dealerships realize that interest rates aren't coming back to the 2 to 3%. They're pretty stable. Hopefully, they'll come down with the new Fed chairman, depending on what happens globally and geopolitically. But so I think that really stuck with me when he told me that this morning, because
I think
we
people
were
are
so
getting
used to like
to
0, 2, or 3%. I mean, even the consumers now are swallowing. Look at the price of gasoline here in California. I couldn't
Oh
believe
God,
it.
I can only imagine.
Yeah.
But they're paying it.
At some point, you accept it. You accept it for the time being, and it shouldn't be a reason to not grow or expand when the right opportunity crosses your
This is
desk.
true.
Right.
Because the ULI is still very
I
significant
think on the
compared.
consumer side, they see a lot of I mean, a lot of stuff has stayed, there have been challenges and hurdles on the consumer side for several years now. It's high interest rate, but now we're getting a little bit, on the consumer side, more used to the
Yeah.
environment. And then things seem like they're stabilizing in some areas, enough to where, okay, rates aren't going up. They're not necessarily going down, but this is kind of the new norm. We're seeing houses being sold. There's some good news on that. So, I feel like that part has been steady, but I think interest rates and all that have had an impact, but I also feel like a lot of OEMs have worked hard to downgrade some of those effects with some promotions and things like that, and help get rid of some of the older, now that we're kind of normalizing the inventory levels in a lot of places, and not having oversight, and we're not having, 2, 3 year old, vehicles sitting on the showroom floor, and it's getting more, up to date into the 25, 26 levels. It's helping.
And Brendan, I would also mention more and more calls with sellers asking us to evaluate their business is really starting because what we were used to years ago was that these dealerships are multi-generational.
Yeah.
Nowadays, these kids don't want anything to do with the business. They don't want to work very much, or they just have it. They went to college and got a degree in something.
They don't want to
completely
do
different.
what dad did,
No, and so
You saw how hard dad worked,
Yeah.
or mom, and not
Right.
all kids, but yes.
So the
Right.
kid, the owners are calling us and like, look, I have nobody to take over this business. I need to start planning. What am I going to do with this dealership? And maybe it's 5 years out, but that's the conversation we want to have 5 years
Right.
before you sell, so we can help you prepare for that.
So yeah, I mean, and I think that as far as like the sellers go, are they being more proactive? I think about this than they were maybe a year ago. You seeing more interest on that, just being like, I got to get things in a row, to start planning for the next phase, and again, a lot of stuff we do see, I mean, I came from a family business, and my dad wanted to hand me his business, and I didn't want it, I wanted to go racing and spend money, not actually make money.
Very typical.
Yeah.
No, I think what I mean.
I think
Go
there's
ahead. What do you
there's
think?
been a lot more education on
That's
these
true.
types of subjects the last 10 years, and I will take credit for some of it. I mean, we're a big proponent for education. We just believe in it. There's one of my favorite proverbs is the best time to plant a tree is 20 years ago, and the next best time is today, right? So we've always been big on doing these webinars. It's one of the reasons I joined on this podcast is just to share any insight we can that can help people, that can be of value to people that are not even in that fork in the road today, but know that it's going to come up one day. And I think the Powersports business magazines, I mean, there's been more articles written about succession planning and estate planning. So overall, and respectfully, all of the consolidation that has taken place over the last 15, 20 years. So it's become top of mind as it always should have been. Succession should always be something that's top of mind. When you take private equity groups and large organizations and they invest in an opportunity, they already have their exit plan before they ever acquire the opportunity. So we're seeing that succession planning, estate planning, evaluations, preparation, it's something that's become more talked about in the last 10 years and something that now, as of late, especially as everything came down post COVID, you're seeing more dealers are giving serious consideration to. It's only a matter of time before one day I'm going to decide to hang the riding gloves. Why don't I at least start putting some investment in now to better understanding what are those things that I can do that can enhance my marketability, improve my valuation, and reduce the friction. So we are seeing more of that across all of our dealership industries.
And and that those are some great points. And I'm thinking too that we're hitting an influx or transition where you've got these generational family dealerships and people that have owned them for 30, 40, 50 years, and they're now going, yeah, it's time, and maybe they don't have the family to pass it down to. Sometimes they do, sometimes they don't, but it's like you're seeing more of those, in the last few years, those transactions happen.
The business has been more challenging the last few years. It's not necessarily something that a next generation would want to take on given the environment or how it's been for a few years now.
Right. And I mean, I think that things will stabilize, and they appear to be stabilizing, but we've also had, COVID, we got used to a little the COVID high, where things were really going, but everybody kind of, the experienced people knew that wasn't going to last, and now we're kind of more back down to normal. But with things, the interest in power sports and motorcycling has not waned, in my opinion. So that is the good news, and I do think that having, and our goal as a magazine really, and a lot of working with you guys and working with Morgan Stanley and Paulina and everybody that's like trying to educate our dealers and hey, you have to get yourself financially fit personally, as and as a business, no matter what, even if you're going to hang on to it for it, but you need to have yourself set up, and wealth management is important at this stage.
And our objective is to hopefully the client can continue to enjoy the quality of life, if not enhance, because it's more time with family, more time on the road on their bike, more time traveling, but they can still enjoy the same quality of life financially now that they're no longer dependent on the dealership. And that's where wealth management, start with the end in mind, work it backwards, meet with a broker, professional advisor, discuss valuation concepts, take it to your CPA, take it to your financial planner, and make sure you have a real roadmap written down about what it's going to take for you to carry on the rest of your life without being dependent of your business that you've had for decades, and yet still enjoy the quality of life, only enhanced with more time to do the things you enjoy doing. That's the objective. And that starts with education and nothing else.
Yeah, absolutely. Well said. Well, George and Juan, I want you to get a final say in here before we hang up here. But, what do you think is, one thing happening in the market that dealers may not appreciate happening in the M&A market that they may not know about? Is there something, any words of advice that you can hand off?
Well, since I've been to Southern California, I've met with several large power sports dealership groups, and they're all very optimistic and bullish that 2026 year to date is significantly higher than 2025, which is very exciting to know. So they're now in the preparing stage to exit at some point because they don't have a succession plan in place. So our job is to help prepare them with that exit.
Yeah.
And it's so I don't know, it's really
Oh, they froze up.
Yep.
made me feel good. These guys have been around a long time. I mean, these are old time dealers that have seen all the different cycles that they've, since they started 30, 40 years ago. So I think, as far as unforeseen things, there's really, you can't forecast what could happen that's out of your control. All you can do is control your own business and your operating business.
I do think 26 is looking a lot better than 25 so far, one quarter in, and just kind of reading the tea leaves, even with all the turmoil going on. But that's been happening now for a couple of years. Juan, how about you?
Yeah, I mean, the optimism, I hear it out there when I talk to buyers and sellers. I think there's optimism in which we're seeing. But I think my perspective to a dealer, whether they're wanting to sell today or in 5 years, is talk to somebody like us or talk to us because there's a lot of preparation. If you want to maximize the value of something you built for 20 years and your kids don't want to be involved with it, let us help you maximize the value. And there's a lot of preparation that goes into that we can guide you through, that when the time comes, that you're actually going to get, the most value for this, asset that you built for this long.
Right. That you put your life into. So, yeah. Well, yeah, these are great. I thank you guys so much for coming on today. And, George, Jesse, have enjoyed the, well, you guys are all in sunshine. I'm here and we're getting actually decent here in Ohio, but, not on the coast and in Florida, but, enjoy your visits out there in California. And we'll hope to talk to you guys soon.
Okay.
Thank you,
very
Brendan.
much. You appreciate it. Thank you.
If you like this podcast, please like, share, and subscribe. We also invite you to connect with us on powersportsbusiness.com.